So hey guys, it's Rich and Mike again. We are back for the November market update, and this will be our last update for the year. Next month will be January already. It's kind of hard to believe.
Unbelievable.
Yeah, yeah. In this month's video, we're going to talk a little football. We're going to talk about an investment company that we just launched and have a call to action there. And then a little market update for real estate and interest rates, and then give you a little peek for next year on some monthly challenges we're going to be doing as part of the monthly newsletter. So, how are rates doing for you?
Well, it's interesting. A couple of days ago, rates were probably as good as they've been in several months. Uh, the PPI, so the inflation numbers that came out today and yesterday weren't awesome. So rates have ticked back up. I think that's probably a short-term thing. I think long-term rates are going to continue to get a little bit better than they've been. This week isn't awesome. So I also think with the news that we've gotten, it's probably unlikely the Fed's going to cut interest rates next week.
Yeah. Yeah, we should pick a better time when rates are better. So
Well, they're still good.
Yeah,
I mean, they're
yeah.
not. It's not like they were even. I mean, they are still better than they were last month.
Yeah,
Yeah.
yeah, yeah. And on the real estate side of things, I mean, if we look at what prices have done, we did see a little bit of a decline in the average price and the median sales price. That being said, if we look at the average sale price in Spokane, it's $489,000, which is crazy. And we look nationwide, I mean, we're up near 350,000, which is the highest it's been. And if we look nationwide, it's the highest it's ever been.
Yeah,
It's
absolutely.
nuts. So despite high interest rates, I mean, we're still seeing price stability, which has kind of been the theme of our videos. I think since we started doing them.
Well, I think as we've talked all along, there's nothing probably out there that's going to cause home prices to drop. But nor are they going to probably spike. They're probably going to stay fairly stable. So I mean, if you're waiting for home prices to go down, I just don't think that's going to happen.
Yeah, and so, if we look at home prices, it's really an inventory thing. And if we look at inventory and the new pending sales were down 24% in the month of January or November. I can't remember what month we're in. We were talking about January earlier, some in January, but you see them down 24%. And the new inventory coming onto the market is also down double digits. And there's probably some seasonality into that, but it all creates price stability when you don't have as much inventory as you do typically.
Yeah, I mean, and I think it's the same thing with as rates continue to improve. I think it's allowing some people to go buy a house that maybe, as you said, to get up to more to the average purchase price. Rates were probably start soundly in the sevens a little while ago, and now they're soundly in the mid sixes. So
yeah,
I mean that does give people more purchasing power for sure.
Yeah, yeah. So we've probably reached a point where it's like, hey, like I can rent, upgrade, downgrade. Rates are probably going to be at least in a tight range for a little bit, I would say, and prices are stable. If not, if we look year over year, prices are up, 2.5%.
Well, and I also think if you're looking at rates too, is there isn't going to be some cliff where the rates drop down and there's a 4 in front of them anytime soon. I think we could get into a point where we're having rates with maybe a 5 in front of them, but that's going to take 6 or 8 months. So if you're waiting for that period, you're going to be waiting a long time. There's just nothing out there in the economy, especially as like the stock market's hitting all-time highs, that's going to force rates down to that kind of level.
Yeah, yeah. And I know we were kind of emailing back and forth within the month, and my question was like, how much would it cost to get a rate down into the fives? And it was $20,000.
That's significant.
Yeah. And so it's like we're making this decision of like, let's get a rate down into the fives, and it's going to cost you $20,000 today, or cost the seller $20,000 today. I mean, you're probably better off waiting until you can refinance out of it.
Or even look at a temporary buy down. At least that's a forced savings account where it's your money.
Yeah.
So if rates were to improve, you could use that money to help pay for your refinance expenses.
Yeah, yeah. So, yeah, I mean, the market's pretty much the same. I anticipate going into the new year, it's pretty much going to be the same, where, we see the ebbs and flows of inventory coming onto the market, kind of some average price growth of maybe 3 to 4, 5%. And I mean, rates probably in the high fives to mid sixes.
I would agree. But from a lending standpoint, there are becoming more opportunities and things that people can do if they really want to get in a house. There's much more avenues for bridge loans, much more avenues for home equity lines of credit if you need to do something to your house to fix it up, but you still want to buy before you sell, if you will. So there's lots of opportunities out there that it's becoming easier potentially to go buy that house
Yeah. And if I'm like what is a bridge loan? I mean, if I'm
So basically, a bridge loan would be taking the equity on the house you're going to depart and using that as a down payment for the house you're going to buy. And times where you use that is so you could purchase this house first and then do whatever you need to do to get that second house. Either you just want to move first or things you need to do to improve it to get it in marketable condition.
Gotcha. So you could use the bridge loan to get your house in up to a really good condition to enter the market or purchase.
Or a combination.
Yeah,
Yeah,
that makes sense. And then that's just paid off when you end up selling the house.
Correct. Yep.
Okay, awesome. Well, we're going to switch gears just a little bit before we talk about football, which I'm not super excited about. I'm a 49ers fan. It's not been a good year. We want to introduce INW Home Buyer. We recently set up this company to find off-market properties. And so if anyone watching this video or reading the newsletter is interested in investing in real estate and you want to be added to a mailing list to be updated for when we find properties, please reach out to us. My personal cell is 509-435-3287, or I can be reached at rich@SpokaneHomeGuy.com. And that's to get on a list for off-market deals, whether it's rentals, fix and flips, or anyone that's just in general interested in learning about real estate investing and what that might look like. So
it's a great opportunity.
Yeah. I mean, it's a lot of fun sometimes. You find some interesting things, that's for sure. So, so to kind of round out our video, I mean, we're going to talk about the last place 49ers, and I think first place Seahawks.
They are. The CLCX are currently in first place in the NFC West. I think it's a surprise to both of us, to be honest with you. I'd like to think it's because the Seahawks roster is great. I think a lot of it has to do with the San Francisco roster is very injured.
Very injured.
You know, when Christian McCaffrey hasn't played but 3 or 4 games, he's a game changer. So
yeah, I think it's the most injuries. I mean, a lot of key players are out, but it's not been a great year. I hate football. I hate fantasy football.
Can we look forward to
I hate football.
To the college football playoff, though?
We can.
I mean, that's new.
Yeah, that's going to be pretty fun.
Yeah.
My daughter's a Seahawks fan, so I guess I could root for her and her team. So, yeah. But as always, we thank you guys for watching the video. Be on the lookout for next month's video, next year's video, which we'll shoot first part of January. And we're going to have some competitions or giveaways, contests that we'll announce in those monthly newsletters. And hope you guys all have a Merry Christmas and a Happy New Year.
Merry Christmas.
Hey guys, it's Rich with the Spokane Home Guy Group, and I'm joined by AJ Nelson, one of the agents on our team. And this is continuing our agent spotlight and introducing you to people that are currently on our team and have been with us you've been with us for quite some time now.
About 5 years.
Yeah, about 5 years. Yeah. So what originally got you into real estate?
What got me into real estate, I was in food and beverage for several years, and then after that, it was just always on the back burner, something I always wanted to do. Been thinking about it since about 2010, actually. 2018, it was time to go, and then I got licensed. So.
Awesome, yeah. And so, got into real estate 2018, going on 6 years. I guess it'll be, about 6 years this coming year. Yeah, if my math is correct. I think that's pretty close. So outside of real estate, tell us a little bit about yourself. Like, what are your interests, family?
Yep, wife and 5 kids. 2 of them are grown, 1 of them is married, 3 of them are with us at the house. Love hockey.
Chiefs, Kraken.
Chiefs and Kraken, religiously.
Go Penguins.
Yeah.
Yeah, and so do you have an area of specialty within real estate that you focus on, or like where have you found kind of the most joy or excitement in this industry?
Yeah, a lot of, I've dabbled in a lot of the different sources of real estate, but one of the ones that I've latched on to are open houses. I like the event aspect of it, and then foreclosures also, the distressed properties. I love being able to help families that feel like they're back up against a wall, in the sense that they feel isolated on an island, and I can come in with some expertise there and kind of regain trust and things like that. So yeah,
I'd say you've done really good with that as far as like finding a solution for somebody when they didn't think there was one, and whether it's staying in the house or finding a buyer that takes the house as is, or just makes it convenient and kind of gives them some clarity on what the next step is. So that's
right.
pretty cool. Yeah. So your open houses, which is the event-based deal. If you guys ever are out in an open house, you'll probably see AJ, particularly in the Shadle area. That's kind of the area of choice that you focus on or have focused on. So obviously stop by and say hi if you ever see any of the marketing for the open houses.
Definitely.
Yeah. So as far as real estate's concerned, like any predictions for the market coming up, or like what do you see happening?
Predictions for the market, that's a tricky one. I think buyers are pretty confident right now that real estate is a secure asset. I don't think a whole lot will change in the next couple of years, which is good because after 4 years of polarized, good and bad, it's good to have some long-term security, I guess, in the space.
And it's made it a little bit more of an even playing field for buyers right now, it seems. So if somebody wants to get a hold of you, what's the best way for them to reach you?
Social media, email, or phone. Phone number is 509-362-3201.
And how about social media? AJ Nelson?
AJ Nelson, yep.
Perfect. So yeah, if you guys are in the market to buy, sell, or invest in real estate, mentioned foreclosure properties, sometimes those can be an opportunity on the investment side as well. Just reach out to you and a phone or social media.
Yep, love to help you.
Awesome, thanks.